Nick Setien from Wedbush. Nick, what is the case here? Why do you think Shake Shack's going to rise further?
Well, I mean, I think just by necessity, post-COVID, they've had to address and accelerate the digital investments they're making. Things that probably should have already been, on their plate a year and a half, 2 years ago, like Chipotle had done. And so as those digital investments, come to fruition, my analysis at least indicates that, the legacy units are likely going to see 10% plus types of sales lifts, once normalization occurs post-COVID. On top of that, again, because of necessity, they're exploring, multiple formats, including a drive-through, which, the first one we'll see next year. That expands effectively the addressable market. And so previously, their target was 450 units. I'm estimating that it could be as much as 1,300 units now. And even if I'm being aggressive, with my estimate, even half of that number still means that they're going to have an incremental 4 to 5 years of growth at current rates beyond just the 450 units.
Nick, they've always in the past prioritized prime locations for their restaurants. Do you think in 5 years that'll look very different? And in the short term, how long are their leases? How long are they tied to those relatively more expensive rents?
I don't actually think it's going to look that different. I just think that the various formats that they're exploring now, it's still going to be similar, medium household income demographics, still similar number of households, types of demographics. It's just that they're not necessarily going to be tied to shopping centers. And so I don't necessarily think they're going to go into demographics that look very different than the demographics of the current stores. I just think there's going to be an opportunity to, maybe go into areas that they would have felt not as secure going into in the past.
Nick Setien, thanks so much for joining us. Shake Shack up 2.5%.